We're live on the marketplace now. It's now time to get to the market, the stock market, of course, to do some analysis. And it's 18 days into the new year. We want to take a look at how this performance of the stock market is like and how the Ghana Stock Exchange opened the year for trading. Joining me via Skype now for that analysis, we have the head of research at Databank, Alex Boahen. Alex, good afternoon. Welcome to the market, please.
Yeah, good afternoon.
Now, so how did the year open for trading and how have the various equities been faring till now?
Oh, well, broadly speaking, if you compare the performance of this year to last, I think the performance has been sluggish this year. If you look at the broad market indicators, such as the GS index and also the financial sector, all have been flat so far compared to last year. Last year, by this time, the market has done just about 10%. Yes, but as we speak now, it's just even in terms of trading, if you look at volume of shares that were traded last year, same time, has so dropped compared to this year. But we are seeing some encouraging signs from some specific companies, especially those who lost value last year. We've seen that some of them are actually recovering some of the losses that they posted last year. So, in a nutshell, what I would say is the market has been slack, but we are seeing some encouraging signs going into 2018.
Now, I believe it's early days to make a fair assessment of this sluggish performance, but what do you think, in your estimation, could be the cause for this current development?
Well, I overhang from a market last year. There was sort of a spillover of the poor market sentiment, banking sentiment in the other sectors. So, for me, I think generally it's a spillover of the banking sector sentiment. But as banks are, the capitalization exercise is nearly done, so we expect confidence in the market to return.
So do we expect any increase in capitalization of the market, let's say in the first quarter of the year? Do you expect anything like that?
Well, it's a bit hazy because we don't really see a clear pipeline of transactions that is coming to the market. Last year, the market was to some extent inundated with activities or capital raising activities. We are not likely to see that this year. So return basically will be driven by increased share prices.
All right, now let's look at the financial equities, especially when some struggling banks late last year tried to seek or resorted to the stock market to raise some capital. Has it had any impact on the financial equities on the market?
Yeah, sure. For instance, if you look at the companies that were listed, the banks that are listed, like SG, Calban, these companies, some of them came to raise more capital. Some of them also converted their earnings into equity, shareholders' equity. So that actually prop up their capital base. And those who conducted issue also increased their capitalization. So in a nutshell, capitalization actually went up last year due to this capital raising exercise in the sector.
So, beyond this exercise, now that it's over, do we expect any more financial institutions to list on the market?
Well, not certain, yes, but SEC is also some regulations to get, especially in rates market. So maybe we may see a couple of listings, but for now, there's clear pipeline transaction.
All right, now let's look at delisting. From late last year, we've seen a couple of delisting and threats to some companies which did not put their books right to be removed from the market. Would this, or is this having any impact on the performance of the market? Some believe that it's kind of a regulatory approach, so it's normal. Others think that we shouldn't do that because it's still a fairly new market. What's your view on that?
Certainly no. In as much as we encourage companies to stay on the market, the SEC must also be careful and apply the regulations, because coming to the market to raise money as a company also comes with some responsibility. So if you fail to actually adhere to those listing requirements or continual listing requirements, I think it's a right for SEC to take actions. Otherwise, it can affect the market as a whole in terms of its credibility.
Now, Alex, let's look at the commodities and the currency markets as well. You know, the CD-dollar relationship plus other international trading currencies. Looking at the trend, has it started well enough for the year?
Well, the dollar, the CD has started the year a bit shaky, but it's not really bad. On a year-to-date basis, in terms of depreciation, if you look at the interbank exchange rate, it's just marginal. If you look at the euro and the pound, it has been quite stable. But normally in the first quarter, such movement is because the CD tends to record some depreciation, especially in the first quarter.
All right, now
typically.
Okay. Now, let's look at this report which just came out this morning. The London Stock Exchange has recognized some companies, some distinguished companies in Africa. And in Ghana, Springfield is one of the companies that has been, recognized by the London Stock Exchange and, for that matter, listed on the stock exchange. Before then, we had Quantum Group of companies. Now, with this situation, how would you assess, its impact on the local markets?
Oh, well, I'm not sure about the impact on the stock market. Once a company is able to get onto the London Stock Exchange, that is a big leap, because it gives you some kind of global positioning in the industry that belongs. It's also open up to a big pool of funds that the company actually tap into to drive its growth. So if you compare that to Ghana, Quantum Energy will actually have access to a larger pool, by listing on the stock exchange to tap into it for its growth.
All right, many thanks for your time. Alex Boahen is head of research at Databank. He's been telling us about the performance of the stock market.